morning, everyone. My name is Sriram from the Commodity and Currency Research Desk. This is the Commodity and Currency Outlook for 26 September 2022. So, starting with the currency side of things today, starting with rupee. So, the Indian rupee steadied on Friday's trade but remained under pressure. Rupee settled at 80.99 per dollar against the previous close of 80.86. It briefly tested our new record low of 81.2250 during the session. However, central bank intervention kept the currency losses in check on Friday's trade. However, the rupee had a bad week like other Asian currencies, tracking the strength of the greenback, which soared to a two-decade high after US Federal Reserve hiked interest rate aggressively and also gave a hawkish outlook on interest rates, future interest rates. The euro tumbled against the US dollar after surveys showed the downturn in business activity across the zone, while the sterling also tumbled to over 3% against the dollar on Friday after Britain announced tax cuts and household corporate support measures. While the UK debt office also laid out plans for about $80 billion of additional issuance in this fiscal year to fund the stimulus, and this was not liked by the markets, which is expecting that this additional expenditure will stretch Britain's finances to the limit, and this pulled the sterling lower. Meanwhile, looking ahead, we see the rupee continue to remain on the weaker front. Rupee has opened at new intraday or new record lows at 81.55, with the rupee opened at 81.55 against the dollar this Monday. Again, markets could continue to remain under pressure this week as investors expect the US Federal Reserve to continue to hike interest rate aggressively to cool surging inflation. So markets could also track the NDF and weak Asian peers, weak Asian and emerging market peers. In the early morning, NDF was trading at around 81.50 and rupee followed that and opened extremely weak. Of course, RBI's presence cannot be ruled out. Recent data suggested that RBI has been proactive. The FX reserve has fallen to almost September 2020 lows and during that peak second wave of the pandemic, suggesting that RBI remains proactive to protect the currency. However, we see the focus will be on the Reserve Bank of meeting this week on Friday. Expectation is that the Reserve Bank will hike rates anywhere between 35 to 50 to cool inflation. We expect that the Reserve Bank should hike by 50 basis points to cool stubbornly high inflation and to prevent further weakening of the currency. A larger rate hike would also confirm RBI does not have to remain behind the Fed's pace. So we are expecting that the Reserve Bank of India should hike by or could hike by 50 basis points on Friday. Meanwhile, in the international side, the dollar index remained elevated this Friday, on Friday, and remained elevated this Monday morning, while most of the non-dollar currencies remained on the weaker side against the dollar. On the bond side, the Indian bonds ended higher on Friday and remained elevated this Monday, tracking the strength of the US Treasury yields and also higher interest rates by the Federal Reserve fueled expectations of the Reserve Bank of India to keep pace with larger and longer interest rates when it meets on Friday. So we see further interest rate hikes by the Reserve Bank of India as well. Moving to the commodity side, starting with the energy, crude oil prices crashed on Friday as US dollar hit 20-year high while rising interest rates from the several central banks will also push the major economies into recession, and that could cut demand for the fuel, and that was also one of the reasons why oil fell significantly. In fact, gasoline and heating oil futures also tumbled by close to 5% on Friday's trade. Meanwhile, on the gas side, gas prices also remained on the weaker side of things amid high storage build last week and weak demand forecast in the coming week. We see the crude oil prices could remain range bound over this week. Of course, the main trigger will be the inventory side of things. Last week we saw a small build, but we expect the crude oil prices could continue to remain extremely volatile and choppy. Prices have started on a weaker front, tracking the strength of the US dollar, of course. But we expect that the crude oil prices can find itself some support at lower levels amid speculation that OPEC may intervene by cutting output further when they meet in the month of October. So last time when they meet, they hiked output, they cut their output forecast, and possibly furthermore to stabilize the market, they can possibly cut further outputs going further to support the market. So I think crude downside can be limited on the back of that. On the bullion side, gold and silver prices crashed on Friday. Again, the stronger dollar weighed on sentiments. Of course, the aggressive rate hike situation by several central banks will be one of the other also negative factors for gold and silver prices. And we see gold and silver prices can continue to struggle in the coming week, this week. Of course, we have several Federal Reserve speakers speaking this week. Of course, we also expect that the Eurozone CPI and the PCE price index, the Fed favored index, inflation gauge will be the key drivers. But the Fed speakers this week will be also one of the things markets would look out to. And overall, we see the bias for the gold and silver markets remain on the negative side. Of course, domestically, a weaker rupee is helping sentiments for our gold prices, can help, in fact, can limit downside. But I think overall weakness in the international prices will continue to keep the domestic ones also on a weaker front. So overall bias still remains negative, and the market's movement can depend on the dollar and data points this week. Finally, on the base metals, copper and aluminium struggled on Friday and could continue to struggle in this week as well. Again, stronger dollar and fears of recession will hit demand for the metal side, and this will also weigh sentiments. Aluminium also remained under pressure last week amid worries that increasing flows of Russian material will also weigh on sentiments. However, going forward, we see that tight supply, some recovery of demand from China, and as producers look to replenish stocks ahead of that China National Day holiday festival in the first week of October can cap downside. So overall bias still remains negative for the base metals, but some buying from producers to replenish their stocks before the long holiday can cap downside. But overall, base metals can track the other commodity and other riskier assets. Of course, the stronger dollar will also weigh on sentiment. So overall, more weakness can be expected for the base metal sector as well. So that's it from our side. Thank you for listening. Have a pleasant day. Thank you.